From the morning reading. While the NASDAQ was making higher highs throughout March and April, the percentage of NASDAQ stocks above the 50-day moving average slowly waned. These are not the kind of market internals upon which the broad market can rise, and further reason why we are seeing stocks trading lower in the near term. And yet yesterday, a 20-day high and poor close are often followed by a move up. So how do we put all this together? Well, let's take a look at our overnight action and see what our most relevant leading indicator is to the open at this point. If you look at the four broad market indices, a little bit of weakness, but certainly nothing overly pronounced. The ES or S&P 500 was down about 1/3%. Russell down about 1/4%. NASDAQ just marginally down, and the Dow down about 1/3%. Obviously, you've got Apple is reporting earnings or has reported earnings, and that's a significant component of the Dow, so that should be of interest to see how that plays out. Crude oil down about 0.5%. On the flip side, you have the euro up about 0.5%. Bonds marginally scratch, as well as gold also scratch. So not too much of any significant action there. Let's take a look at the overseas. Asia, you have China down about 1%. Hong Kong scratch. Japan up about 0.4%. And then in Europe, more weakness. Europe has Germany down about 1.5%, and the United Kingdom down about 1.3%. So in general, slight weakness coming into our market open, but nothing super exciting. Perhaps Europe being the most bearish. In terms of macroeconomic reports for today, it's going to be a pretty quiet day up until the time we get to the FOMC announcements tomorrow. Let's see, we have consumer confidence today during the market open, so be aware of that. And then you also have tomorrow crude oil inventories, pending home sales, and really that's about it until you hit the FOMC. So that is clearly the biggie on the schedule for the entire week. In terms of our current volatility conditions, obviously we got a little bit of an uptick in volatility yesterday, but we're still very low in relative terms. Short-term VIX at 12.72. IV percentiles 22, 20, 23, 34 across the four broad market indices. Nothing really to get excited about there. The Russell had more weakness yesterday than the other indices, and this certainly popped up as a standard deviation move. The other indices, though, were relatively calm from that standpoint, though if you look at the internals of the day and then the daily candle, certainly it was not the greatest day. You had the S&P set a new intraday high and then end up turning quite a bit weaker throughout the day and closing in a pretty bearish candle. Did close a little bit up off the bottom, so it wasn't as bearish as it could have been. In terms of our daily report, we are still phase 3, higher highs and higher lows. Indeed, we have now set higher highs, that higher high that we've been looking for so many weeks. And you got to say that the intermediate term phase opinion is solidly phase 3, looking for continuation of this bullish trend with higher highs and higher lows. In general, things are pretty solid right now. Portfolio posture is uptrend resumes with the IBD status. GMI index is a 5 out of 6. Active trader market posture is actually very bullish. Portfolio investor position opinion is 100%. Active trader position opinion also 100%. Market timing for the 1-day and 3-day outlooks are both slightly bullish with a neutral 2-week. If you look at market posture, you do have the Russell fell below its threshold line and turned bearish with that action yesterday, so that wasn't great for that side. But the others, S&P very bullish, NASDAQ very bullish, Dow also bullish. So in general, the overall opinion is very bullish still, and you know, there's just not too much to be made of a little bit of intraday weakness yesterday. Hedge warning status, threshold level 0 plus, which is normal with some cautionary aspects. We did have some additional warning flags fire yesterday from the volatility-based group. The market and decline warning flashed, and a sharp increase warning also flashed. The other thing is we continue to be driven by this number of distribution day count. The Nasdaq actually added one yesterday with a 7, and the S&P also added one yesterday with a 6. So part of the reason why we have remained with a slightly elevated hedge risk level, this distribution day count is certainly quite concerning. You throw on top of that we've had that crash warning fire and these other volatility-based warnings fire. It's not an easy bull market for sure, nor has it been really all year. We kind of put back in perspective, we've really had very few trading days with a 0 or 0 plus in 2015. The first time we had a 0, it only lasted for a couple, 3 days, and then the second time it lasted, I think, 12 trading days before failure, and we are only, I think, in day 3 of this current hedge warning status, this third time. So these in quotes all safe bull market conditions have not been very common in 2015. You got to keep that in mind. From our risk aversion indicators, they're still all risk on, so no further deterioration there as of yet. Option income strategies opinion, the VIX is inside the acceptable window, and only really cautionary statement would be to consider the potential for increased volatility. Cover call strategies bullish, 1-for-1 distribution between in the money and out of the money strikes. Put selling acceptable for selling puts in the current environment, especially against a core portfolio basket of stocks that you are willing to own. And let's see what else we might have going on here. Our sector market postures yesterday took a bit of a hit. Again, reminder, we currently have been, very flat lines on this. So we see with 1 day of weakness a lot of what looks like deterioration that comes into this, and then 1 day of bullishness, and it seems like everything goes green. Really, these charts are very, very neutral in general, and while we've had technically a new breakout, we certainly haven't confirmed this breakout with any serious breadth, much as you heard in the opening comment about the Nasdaq stocks, with the percentage of stocks that are above their 50 days, the number of stocks that are making highs, nowhere near as strong as what the headline might tell you with that market, and I suspect the same is true with the S&P 500. Yesterday, materials had a good day. Information technology and telecommunications followed up at least positive. Everything else was down. Healthcare and utilities, consumer discretionary were down the most. So been kind of interesting. Healthcare has been seen as such a safe sector for so long, and it clearly, if you look at the individual industry groups, has started to show some chinks in the armor. A number of those industry groups, I know the IBB, the biotech group, got slammed yesterday, down 4%. So important to not only be aware of where you have opportunities for growth and consistent growth, not just in the short term but also intermediate term, but also be always aware of just how much volatility comes with that growth. And if you are able to achieve growth with a sector that is less volatile, you'll often be rewarded with that. IBB is a great place, for example, for a very nimble trader, but it can be a pretty tough ride. We've been talking a lot about energy of late. Certainly opportunities with that volatility for trading, but it's also going to require broader stops and more risk and much more nimble trading to be able to take a ride in a sector such as energy or an industry group such as the biotech. And days like a down 4% can be very difficult to be able to stay with a trade and see a positive outcome. Top industry groups at this point are retail, internet, healthcare, railroads, and then there's biotech using the shadow trader ratings. But you see in red, had a tough day yesterday. Well, that should be enough for today. As always, greatly appreciate your contribution to the effort, and you can do that by liking us on YouTube and sharing us with your trader friends. If you have any comments or anything like that, please send your comments to support@falconglobaltraders.com. Disclaimers as always, hit the pause button if you need more time to review this, and then we'll see you here tomorrow before the market opens for the market preview. Thank you.